Okay, this is Ken from Tortoise Capital with midweek review of swing portfolios, and I'm going to quickly look at um, the framing exercise that assigned from this weekend. We took a look at a dozen symbols and then framed them up. And before we do that, let me just take a quick look at some things. There's some videos that have been added to the stack here this past week that I really want to draw to your attention. We've been doing a lot of work in the chat room on trading in the pocket with this hybrid frog. Yeah, it's basically an intraday script, but it's a really powerful pattern that has wide application in the swing trading, and then a lot of the trading that you've seen me do in the portfolio as we go through this has to do with the idea of catching the turn in the river pretty routinely, catching it pretty routinely. So I want to cover the elements of that script tonight before we go through the portfolio review, because I really think there's a general purpose value to the elements of that script, and I've talked about them here in the March 26th, the week 9 videos, just trading in the pocket with the hybrid frog chain on any time frame, video 1, 2, and 3, and then I did some more this week with pocket trading part 4 and 5, and that's what I'm going to address a little bit tonight. There's some interesting dynamics in the chat room about what to do with that script. My observation is that there are more discussions about how to modify the script, how to add to the script, how to change it up, than there is efforts at trading the script as written. And I suppose this is just a matter of human nature, or maybe this is how we learn what the meaning of words are. But this goes, I guess, back to something Robert says quite often, and that is that you understand your system when you can tell other people how to trade it, and they can trade it from what you've told them to do the way you would trade it. I don't know if there's enough of an effort to try to trade it exactly as written as opposed to trying to make it their own. So many of the questions are of that nature. Does this count as an interpretation of your rule? But it's just an interesting phenomenon that I notice time and time again. Is anybody else having trouble with the sound other than Robert? Okay, Robert, that just may be your end. So anyway, what I want you to do is take a look at those 5 videos. They're relatively short, but I think it will absolutely improve your trading. That's my opinion. All right, so what I want to do now is go to the PowerPoint and take a look at the trade framing. All right, so the homework assignment was this right here, was to essentially apply the trade process and trade frame those dozen symbols that showed up of interest. on that weekend report. And it really comes down to this right here, that regardless of the pattern that you're trading, you know, you can ask yourself, and you should ask yourself, all of these questions in order to ensure that you have a complete battle plan for that pattern for the next day. Now, in each one of the patterns, in each one of the systems and strategies, there are specific ways that you apply the reasoning of that pattern to answer these questions, like where you draw the entry, where you set your targets, how you compute reward to risk. All of those things have a particular answer in the pattern that you're applying, but every one of these questions gets answered. So in my view, this is a general purpose problem solving algorithm right here of what to do with that trade pattern. So actually, I'm going to jump right to the solutions. So there's Disney. Yeah. What I want you to know, these are all the blanks that haven't been marked up. Notice that there's a different thing going on in each one of these. So Disney looks like a 5-day down. Real estate also a 5-day down after a nice move up. Brazil, maybe a 551W perhaps. There were a lot of 551Ws in this one. This one is almost a sideways quiet channel below the RL270. So quite a few different things going on. And so I'm going to jump right to the solutions now. What I'd like to do is if you have a specific question about any of these, let me know. Otherwise, I'm not going to repeat the solutions from the video. All right. So so this was a trade frame where I was ready to go in either direction, and what I did on these videos is any place that I see a pocket type of a trade, I'm putting it as a yellow dot, just so you can see what I mean there. Every one of those is an interesting location. There's a place where it can go up, it could chop around sideways like you've seen, or it could go down. So here's a case where from this yellow dot it basically went sideways. Here's a case where it went up. Here's a case where it went down. And so in every case from one of these, you can think of these as critical points. From every one of them, there's a potential move of that magnitude. And we're really investigating the dimensions of each possible trade to see if there's a 2-to-1 reward to risk ratio based on what we see. And so this is one where if it were to go up, if it gets above this swing high, I think it should get to the RL270. If it gets above that one, the next place that it halts is way up here. So that makes this thing attractive on the upside. And then on the downside, there's at least this bottom hump of the dragon. What makes this interesting to me is that we had these two big blue circles over here. These were like in both cases they were bottoming tails that both came down very near the Z3 line, almost but not quite. And there was a nice move implied in each of those. Dave, not necessarily. It's a strategy, not a system. There is in the chat room we are actually creating a specific system out of one of these sets of patterns, right? The pocket trade is simply one that that can occur, like you see here, in 4 different locations. There may not have been a swing trade in there at all, but I just think that the idea of this pocket as a when you see them and then you see price reacting afterwards, it gives you an idea of what's going on, and that can inform how you want to how you might want to mark up your trade, or how to manage that trade, when to make adjustments. So, like on this one here, there's things going on inside this little blue circle. Like this is right where the RL30, which I'm tracing right here, it rolled over. Now it has crossed the Bollinger Band mean. All right, and that's a really important location in swing trading, in my view. This whole way down, the 30 was well below the Bollinger Band mean, and then after this blue circle, we're going to see this as that owl script, that 9-part pattern that ends up getting us in, and then it improves enough so by this second yellow dot, this moment happens right here, and the RL30 crosses the simple moving average 30. I treat that as a change, a sea change, the sea change in the river. All the way here, this river flow was down. After this moment, that river flow turns up, and so there can be a long, orderly upward move. So what happens on this owl pattern that we're talking about with the 9 conditions? This is the region in which that big move down gets sideways and becomes potentially a big move up. What I'm seeing a lot of folks doing is swirling around inside the noise and having really, really tight stops in here. And in this big transition point, at this elbow in the river, if you will, this first pocket, it's telling you that there may be a really significant change in the market state, which is going to allow you to participate in this upward move. Now, it may happen that inside here, we end up seeing swing trades that match some of our patterns, or all of our patterns, or multiple patterns. When we're reading the market, I just think that our RLCO framework and these Bollinger Bands give us an opportunity to see what's going on in terms of market condition or market classification that are very powerful. And so I'm just gonna try to answer your question by saying, although you can mark up the trades like I've been doing and take the trades simply on the basis of those pockets and the RLCO framework, what I asked you to do on this one was really just to frame the trade as you saw it on those last couple of days. But what I want you to notice along the way is that I'm using interpretation of what the river's doing, what the Bollinger Bands are doing, what the dragon is doing. I mean, here the whole way down, the dragon is on the south side of the river. After this elbow period right here, where it crosses, now you notice he swims to the other side of the river, and he's staying on the north side while everything is flowing up. So there's clearly a transition going on in there. And it's more than just the short-term opportunity that's implied in a pattern. It's a fundamental shift in the nature of the market, in my view. And in the early phases, on this early leg up, the market itself was doing this. So there were a lot of really good winners in that first set of swing trades, which are based on, in my opinion, the fact that we were early in the transition phase from a downward moving river to an upward flowing river. And so what I'm trying to say here is that the market condition contributed to the success of all of those trades that were taken in that time frame, and that I attribute 50% of the follow-through to that fact rather than any inherent strength of those individual symbols or the beauties of the particular patterns. I just want you to remember that what the market is doing is really, really important. And where you are in terms of how I want you to be marking up is it's really something for each one of you to answer. And if you will recall, way back in the day when I was looking at when we were looking at the reports, and I said there was a level 1, maybe a level 2, and a level 3 of interpreting the weekend reports. In level 1, you were listening to me read the reports and noticing what I said, and then using that as the start point. In level 2, what I asked you to do was, when you were ready, start by reading the reports yourself and come up with your list. And then when you're done, compare your list to my list and then see what the agreements and the disagreements were, as a way of discovering what your understanding was, or discovering little moments of surprise where I said something you weren't expecting, or we were in disagreement, or where we were in agreement. And then level 3 would be where you have internalized the process of doing the task and using your judgment to interpret the charts in your own way. In level 3, in my view, you have refined the goggles and for your own purposes, and now you are self-actualized. You are using the reports for your purposes because you have studied what works for you and you're applying it to your own trading. And so I'm going to say that that's exactly the same thing that I'm talking about here. Is, instead of talking about looking at the reports to find out what the opportunities are, what we're really doing now is taking a look at the operating environment, this common operating picture, and seeing what is it about the framework that allows us to make sense out of prices, and where do we individually see actions that can be taken, and then how do we express those actions in terms of reward to risk ratios and deciding on which directions to take trades and how to frame them in order to map out our decisions. Right? So when I look at this particular one now, and I'm going to take this as a 5DD, when I look at the pattern that triggered it on the report was a 5DD. But you've noticed that I have framed this trade in both directions. So this is a variation on 5DD because of where we are in the market. And on this one, this has been in a bearish condition. The RL270 is sloping downward. All of this price action is below the 270. So this thing has been suffering. It has not been gaining mostly. It's only these last 30 days or so that it's really been moving up. So that's the context that I put into how I frame this 5DD trade. And I'm showing that I'm prepared to take the 5DD failure or the 5DD long because of how I'm interpreting all of this previous price behavior. I want you guys to be clear about that, because in order to make these systems and strategies and techniques your own, that's the kind of routine judgment that you have to apply in a consistent way. So I want to make sure that we're clear on that. That's what I'm talking about in this exercise. I really think that's it's important for you, in order to become your own trader, to be self-reliant. I think you have to have a robust framework of how to look at the market and come to your own conclusions, and then set up these little moments in the market like this when they're interesting in a way that allows you to be effective and consistent and disciplined. So what I'm going to show you here on each of these is the way that I am applying it and try to talk through my rationale. So I'm really treating this as a level 2 exercise, in that what I did was I gave you a bunch of blank charts, not marked up with a framework. I asked you to go through a trade framing process, and then compare it to this set that I'm showing as a way to look at my, my set and your set, and then see what can you discover about the difference in the way that you frame the trade and the way I frame the trade. So the next exercise that we do from this weekend coming up is going to be a level 3 trade because we're close to graduation here. And what I'm going to ask you to do there is be fully self-actualized. And that is, you go through the reports, you find your symbols of interest, you pull up the daily charts, you trade frame them, and then you post, up to five slides in the file section and show how you have applied that whole process to what it is that we do. Okay, so that's going to be the homework that I'll write that up after this this session tonight and post it. But that's where we're trying to head with this, is I want you to get to the level 3 of confidence and proficiency so that you can see the report, find the trades of interest, prepare them with a trade frame in a way that makes sense to you, and then show your work. Okay, so that's where we're going to head with this. Any questions on that? Okay, I'm going to take silence as consent, and then move on. So, Disney, that's what I was saying. Now, I've recorded this session already, so I'm going to leave that to do most of the talking. I'm just going to flip through here and see if there's anything that I need to say. So here's one where it seemed to me that this congestion area over here was materially different than this upward kind of move that we had here, that chain, and that the warning from those two pockets, a couple moments of the pocket trade were developed in here. This first move looks like a pattern 5 breakout from sideways quiet channel or a continuation pattern. Right, so that's not a system, but it is a strategy. Lisa, this homework was posted on a YouTube video on the homework whiteboard and sent out in an email message, or a message on the whiteboard. If you didn't see it, then that's my fault for not alerting. Yeah, it was. This is the video that I'm talking about here. The one that the swing portfolio update. That's where the blanks were, and then this one here, the swing trade framing exercise solution for March 28th, plus a portfolio review is posted here. This one, homework 0901, where what I really want you to do is, by this weekend, complete the framing exercise. The blank set. Looks like maybe it was in the messages. I'm sorry. So if you look in under the messages, take a look at this one here. Find it under messages. You're going to essentially take the trade framing process for these symbols. And then go through that. All right. So my bad for not making that clear. Well, no worries. Well, it will still be instructive, even though I'm going to flash through these slides pretty quickly. You can still take the basic files, and I'm going to have to reload this thing. Sorry, I'm so disorganized here. The New Orleans trip really kind of threw me for a loop. I picked up a bug when I was down there, and not good. All right, so here's the exercise. It's uploading into the into the file section. So anyway, that's uploading in the background. Sorry about that. Well, this will still be useful. So when you get the blanks, mark them up yourself, then come back. I'm going to upload the I have the other solution that I'm going to upload to the file section. Also, there's the video where I talk through some of these things. And so, again, what I just want you to notice is, because the lesson I want to talk to tonight is about that that owl pattern, those 9 steps, and this idea of pocket trading. I just want you to notice on this one, I am seeing that sideways quiet channel. That becomes an important target on down here. So if this trade pattern, if this thing fails, I really see it. I see 1, 2, 3 steps to negate all of that price action and bring it back to this price level. That was the sideways quiet channel. If that happens, then all of this stuff was an aberration. So where we are right now in this trade frame is I see us in this trading range. So all that has happened in the past 3 months is that this thing has moved from this tight trading range to a new trading range, one level of price higher and more volatile. And now the question is, now that it's come back here into the middle and had this breakdown, is it going to go back up and test the top of the channel and then maybe break out to a new level? Or does this thing fail and then come all the way down and rejoin that previous chunk? So those are the swing possibilities. Or maybe it does a third thing and just stays along this even keel and then stays in the channel defined by these 2 inner pieces. So that's what we're going to discover with silver. So real estate has been a really powerful player. This thing got all the way up to Z-2. The last time it was at Z-2, it had this little pocket trade, gave us another leg, and now it's done a 5-day down, essentially. And because the RL10 is about ready to come through the dragon, even though this has been strong, I set this up as a trade frame to go back to the Bollinger Band mean, because if it does fail through here, that'll be enough price action that will cause the RL10 to come through the dragon, and then there will be an RLXD. And I don't want to wait for that to occur, because if that does, I will miss this move. So I'm willing to frame the trade in that direction. But if it finds support here, like it did here, then there's a potential for another nice upward move. The reason that I'm willing to frame this strong sector to the downside is because I noticed that this time it found its little pullback was just one day. It found support at the edge of the dragon and then continued up. On this one, it found support at the edge of the dragon and continued up. This time it got weaker. It came all the way through the edge of the dragon, held, and then went back up. This time came to the edge of the dragon, held, and went back up. But this time was different. Price came all the way through the dragon and then spent a whole day outside the dragon, and now the RL10 rolled over and is coming back. So this, to me, looks like a different condition than all of this stuff that happened in here. And this was a really nice move, don't forget. I mean, this is, from 67 to 77. And that's a 15% move in real estate. So once that thing starts trending, it can keep going. So real estate as a sector, as an alternate asset classes, has some very nice swing possibilities. It doesn't have the kind of intraday volatility that makes me really attracted to symbols like WYNN, W-Y-N-N, or XIV. But its volatility and its swing characteristics on daily charts makes it very interesting as a candidate for swing trades. And plus, it's an equity, but which is geared towards the real estate sector, gives it some of this divergent qualities. It's not as strongly correlated to the S&P as other sectors that we trade. That makes this a very attractive candidate to be on our swing trade radar all the time, because it tends to be out of phase with the markets at many times. So that's why on this one, this 5DD, even though it's got a really nice upward move, and you would be thinking, well, the obvious trade is this one where, oh, this is a buy a pullback. And so if it does do this, that just tells me there's a lot of people that are doing that. But at the same time, I see baked into the cake a return back to this RL270 and possibly down to the belly of the dragon. And then if it fails below here, then that's a whole new thing altogether. That would really be surprising, but I see that as a possibility. So that's why this one is framed in both directions. Brazil. Now, for 3 years, this thing has been horrible, and it terminated in this final exhaustion leg down. And this is undergoing a sea change, and notice, and I say that because of the RL270. It's been down for so long. But now this nice move that on this chain, if you will, that has moved it to the top of the stack on the intermediate term, has now caused the RL270 not only to bottom, but also start to curl up. So that makes me see this level down here as a really important support level, a long-term bottom. And so now the question is how are we to make sense of all this upward movement now that it's happened? How does that inform our trading going forward? Recognizing that this thing is really volatile on the swing basis. Look at that pullback followed by this rebound and gain. Look at the volatility and acceleration in this sucker. Look how it tentatively came out of this long decay and gave us a couple pockets where it could have failed. This is the first mice over in here. They turned this thing around and got their little first piece in and then pulled back. And now this is where I think institutional money started coming in. There's the Bollinger Band pinch, some pockets, and instead of failing back down here like this, it turned and there was some surprise and a nice big move up. So now here we are up in this trade frame. Perfectly positioned in my view to go in either direction. If this thing were to fail here, then a move back to this level in 1 or 2 days would not be surprising at all. If it did that and then fell through this price level, I would add a second position, because now I think all of these guys were very thin and the real price level is here. So I want to have 2 scoops on. This risk and money that I might make in here is what funds that next position, so I'm going to scale in right there. And then if this little price level fails, it's going to go down and test this one, and then I'm going to have enough money in hand that I can fund a third position. And then if it breaks through this price level, I'm going to have 4 positions in hand with maybe 5 or 6 or as many as 10R in hand if we got lucky. There could be 5 to 10R in hand at a price level where we're just starting to see the next great unwinding occur. So the specific pattern we're looking at here is nothing more than a 551, right? 551W. 5 weeks ago, price was down here, and it's improved over the last 5 weeks. It's somewhere right around here. So that's positive. 5 days ago, this thing was up here, and it pulled back. And then the price action on that previous Friday was up. That makes it a 551W. But what makes this thing really a high payoff target for framing is the fact of this other context, all this other stuff that's baked into the pie here, and then here, an orderly move, then the explosive move, and then all of this volatility. This thing is really at the very volatile. This whole thing up in here is still in question. How is that going to be resolved? Now, if it gets out of here and gets above this purple line, then it tells me the bulls have won and up it goes, and that's where I'm going to add a second position, because I want to be large there, because I think the size of this move is the size of the next move. So I'm going to use markets money to fund a position to get large. So that's why Brazil is a really interesting member of the swing trade portfolio. It has the qualities of being very volatile intraday on its own merit and very liquid, and it's bidirectional, and it's strongly correlated to the U.S., but it's like trading the U.S. market with a lot more volatility, both intraday and then on swing basis. And because it's a large, diverse set of sectors in an economy, more so than S&P, it offers you these huge potential swings that can last weeks and months and quarters. It has its own currency, so it's the policy changes that they make there have large impacts that unwind over long periods of time. That's why this thing is such a powerful target for swing trading. Hopefully, any questions on that? Does that all make sense? I'm going to assume that it does, unless I see your questions in the box here. So that's the Brazil context. Now here's something that's the opposite of that. So this is Nike. All this thing has been doing is trading inside this segment like this, sideways, up and down, up and down, up and down, up and down. Pardon me. Now, what makes this one interesting is the fact that the river was down. Now the river got sideways, and now the river has started to move up. So again, inside this segment, something happened to change the nature. Instead of this thing being sloping downwards, it went to moving sideways. And where we see that, or where I see that unfolding, is look at the difference between the RL10 here where it bottoms and the RL10 where it bottoms here. That higher low. And also the higher high. Before, this thing was, the upward move on this swing was how high it got up in here. And this swing was actually a lower low. So when you set up this little pattern, this thing is still downward because it's got lower lows and equal highs. But now you have this pattern. Higher highs and higher lows. So something materially happened inside this frame as compared to that frame. And you can see that sea change reflected in the dragon. You have the belly of the dragon smoothed here. That smooth belly of the dragon moved there. Right? So when you see, that's like a pattern 4 in the RLCO framework. So this location right here is a pocket. Right in here, this is a pocket. It's in the elbow. You know, that little hump in his back right there. Those are good places to look at entering because you have the implied improvement of these higher lows. So now, after this little swing, now that I've said that, now let's take a look at the trade frame that I've posted here. So after these two higher lows, he made a new higher high. Price came back through the dragon and held support at the southern skin of the dragon. This is not inconsistent with the fact that this thing could go higher. So that's the case that it can go higher. The RL10 got here, and then it got here. That means this thing could get up into here. This next wave could look like this. And that's a significant orderly move in a symbol that moves, that has been moving in very nice waves. Look at those nice waves. So the upward case from this moment is that it could do this. And that's why I'm interested in it on the long side. Yeah, Dave says, should we always have a chart of SPY open on the screen at the same time? Yeah, absolutely. If you go back to the earlier, around lesson 1 or 2 where I talk about market classification and its power, what I'm trying to make the argument for here is that these the effect of the market is large. So if you have in your mind, if you start with SPY and get an appreciation for how his movement is going, how is that dragon moving through the river and whatnot? Where is he in his cycle? And remember that that's contributing to the behavior of these symbols in an important way. Now you can start looking at the synchronization between market, sector, and target. To a certain extent, you can get a lot of what you need just from looking at the context the way I'm describing here, because the way this dragon is swimming and the RL10, the price is moving, that's how it is responding to the market conditions around it too. So this is how it's behaving. And so you can infer a lot about its strength and its health simply on the basis of looking at this. But if you also combine this with SPY, you're going to be in a very good position. That's why the first thing I do every day is update that market health check where I look at SPY before I even look at any of the reports or anything else. So specifically now on Nike, I notice that it moves in these nice smooth waves. It had a nice inside day on Friday, right? In the middle of all this vigorous 2-day move, it didn't fail further on Friday. So Thursday was a big surprise day, the Fed. And now here was that nice inside day, and now it's postured. The argument that it goes up is nothing more than it's going to make this kind of a move after this series of higher lows. The hypothesis is that it holds here, and now the move looks like this, and that should get it up into this region. That's why I'm interested in the long side. And the price level that gets me interested in it is it just simply takes out Friday's high and takes off and goes. And this one, well, this is an easy one to see because the last time it fell through the river, it just kept going and found support down here by Z-2. And that's all this one does. It says, hey, it's going to go down and retest that. And that's a tradable, that's a 2-to-1 reward to risk. And then if that one fails, it comes down and tests the belly of the dragon. And if that one fails, it comes down to here. And if that one fails, look out below. So this is where, at a failure of this level, is where I add my second position, because by that time, I will have enough market's money in hand to fund the additional risk of a second position. So that's how I'm going to scale in on success. United Tech. Notice this bend in the river right here. The RL30 crosses the Bollinger, the BB mean, and before the river was sloping down, it goes through this transition process, and now the slope of the river is up. Where did that occur? What's your indicator that that kind of transition is occurring? Look at this collection, this mungasso of things going on in here. During this trending behavior down, look how nice and orderly it is. The 10 is out of the river. The 30 is out of the river. The 270 is practically out of the river. The river is flowing downward. There's nothing inside the river at all. Look how nice and clean and orderly. That's the very definition of trending behavior. But now at this little nexus right here, the fact that it didn't fail further, but instead went through this sideways chop, was enough to take it from this trending behavior down to the sideways chop, and now all those indicators came to meet in the middle. And here's where you have the RL30 crossing the Bollinger Band mean. When the Bollinger Band mean is a simple moving average of 30. So the difference between the moving average regression line, the 30, and the Bollinger Band mean 30, that's the entire essence of the opportunity, this space between those lines, created by this initial surge of a move downward. So what I'm highlighting right here, this is the pocket right there. When that RL10 gets through the river, through the dragon, right in here is the pocket. We had an RLCO outside the river. We had a nice big move down, 1. RLCO outside the river, 2. RL10 crosses the river, crosses the dragon, 3. The slope of the 30 rolls up, 4. The dragon is rolling up, 5. All of those things make this the pocket. And an entry in there is low risk, because if it fails here, you just get back on board this large downward move, easy. But if it doesn't fail, it's either going to go sideways, no harm, no foul, no wins, no losses, or it's going to be this nice big move to go back up and catch up with this, which is what it did. So I want you to see that pocket as a very low risk, safe place to start framing these trades that can go up or down with big vigor, or maybe it just chops around. This one I just discount altogether, because no matter, you don't win or lose much there anyway, if it just does that. So here we are. We had this nice move up to here, then some chop, failure to follow through, but it didn't fail. That's the key on this one. This looks like it is consolidating nicely inside this sideways chop. And so I could see a resumption of that move. If it does that, if it gets me in, the next move will be as big as this move. So it'll take me up above 104. But if it fails, all I'm going to do is retrace this. All of these gains will then be failing, and so I'm going to get this kind of a move. And if it fails through these two price levels, this is where I'm going to add my second position using market's money to scale. And then if it goes all the way back down to the RL270, which as we define it, after all, is the long-term fair value, then I'm going to have a double scoop and a really big win. So that's UTX. Easy. This one altogether different. Metals and mining, 3M. Here's that elbow. This thing went from downward sloping river and downward sloping RL270 to an upward sloping RL270 and an upward sloping river. This is where the RL30 crossed the Bollinger Band mean. That makes this pocket a really nice entry. And the dragon was already up for one leg, but even if you waited to see that, you still have a really nice move up in here. And in both of these locations, a pocket is formed where it could have failed and come back to the Bollinger Band mean or the RL270, but it didn't. It just kept going up. So we're at another one of those locations on the way up. This is 3M. So this is corresponding with a really nice upward move inside the market for commodities. A very nice turnaround inside there. Silver and gold have made a nice move inside here. Alcoa's made a nice move in here. And so now we're simply at another place where it could fail. So we had a couple days of pullback. There was a one day a pullback here. It found strength and kept going. It could have failed here. It didn't. It kept going. Could have failed here. It didn't. It kept going. Could have failed here. It didn't. It kept going. So that's all we're doing here is this is just the fifth decision point after this nice move. The larger thing I want to say is, even though it feels difficult at the time, these transition periods are really a good thing for us. That's what planting in the spring looks like. And this is what that harvest looks like when it's done. That's what this is. That's the harvest for all of the effort that we put into suffering and taking contrary positions and saying, well, I'm willing to try going long here. If you wait this long for confirmation, well, first of all, there's no such thing as easy money, but that's harder there. So if this were to fail, I see it getting to the river, Bollinger Band mean. If it falls out of the river, I've set this up as a move back to the long-term RL270. Because this is so much institutional money in my position, in my opinion. I think it's much more likely that this thing just keeps steaming north, and rather than seeing a big fail, I would expect it just to kind of meander along here instead of being a steady, continuous move upward, which I think is the most likely case. The second most likely case is this one. There might be a little dip in recovery, but a pullback all the way to this price level immediately would really surprise me, because it takes institutional money to be able to move that thing that much, that far. And it's not just 3M. That whole XLB, XLI series is doing well. So this is one where I'm really expecting to see it go up. This is the same idea. This is Verizon. Again, here's where I've circled where the RL30 crossed the Bollinger Band mean 30. Here's that nice little pocket inside the dragon. The RL10 has crossed. The 30 has rolled up. The dragon is rolling up. There was a nice measured move down that creates that opportunity. So although I talked to those guys in the chat room intraday on this about the pocket trading, it really does work on multiple time frames. In both of these locations here, those two little pockets, that was a natural place for it to come back to the river, or a second leg to come back to the RL270, but it didn't. In both of those cases, it voted north and kept going. Here, it had a chance to fail to the Bollinger Band mean, to the edge of the river, out of the river, to the Z3, back to the RL270. It didn't fail at all. It just kept going. So this is another one of those conditions. And the Friday's price action was actually a big candle move up, and it put it right on that swing high. So if I were to buy that one here, it's nothing more than a continuation of this long pattern. That's an easy one. There's not even any volume over here for the last 4 months. There's no resistance there at all. It'll just keep drifting northward. But if it fails here, then I've got all these measured moves in order to take it to the downside. Google must-own tech. This has been nothing but just choppy. Here's the upward piece of that channel. Here's the downside piece of that channel. It's just been trading in this choppy area here. What I like about it is that the RL270 is steaming northward. This has been a counter trend rally that brought it down to here. This looks like a double bottom down here around the Z-2 area. Here's Z-3, this is Z-2, here's Z-1, and it's got these two moves up I like. Here was a pocket on the upside, a pocket on the upside, pocket on the upside, and now was in this little sideways chop. So if it fails, I think it comes back in here. I'll take that trade as part of the normal breathing and oscillation. But if it holds here and takes off, I think it comes up to this level. If it gets through there, it's going to go up and test this. This is where I would add a second position above this, so it has to completely clear this entire chunk. So that's how that trade frame, in my view, looks. Walmart must-own consumer staples. The RL270 bottomed out, got flat, and now is moving up. That's good. The river has done nothing but steam due north. The 90 is up. It's been oscillating a long way with all these little pockets all the way up. Kind of hesitating in this chop right here. So I simply set up that trade frame. I see enough room that if it fails through this support level, breaks the Bollinger Band mean river, then I think it's testing this price level. This is where I would add a second position, because then I think it's coming down here. But if it does break out of this, there's no resistance overhead. There's an awful lot of volume been transacted in this area. So and it's near the top of that range. So although it doesn't look like it, this thing is very well postured for going north. So that's my swing trade frame on there. This is actually a 551W pattern, all right? But in my view, 551W makes you interested in it specifically on that day. But when it comes to me evaluating the potential of this, I really want to be in these things for a long time as a swing trader. And that's why I'm spending this time looking at the context of the last 3 months in order to establish answers to those trade process questions. This is exactly what I do on the intraday trade, by the way. Only there the decisions are happening on 1-minute charts and 3-minute charts rather than on daily bars. This is 500 minutes instead of 1 minute. So this is 500 times the scale, but it's fractal. So the interpretation is exactly the same using this framework. The time frame, in my view, doesn't even matter. All right, so that's Walmart. Here's Lowe's. So this is nice. There's a couple, these blue circles I just want you to see. Up in here is where the RL30 crossed the river to the downside. So it had been going up, and then in here, inside that circle, is the RL30 crossed Bollinger Band mean, and now you have, now let's trace the 30 all the way down, and then all the way up. Guess what? Here it is. Here's that perfect moment, that pocket that the dragon creates. That's where the transition goes from the river sloping down to the river sloping up. So it started with this circle and then officially was over in that circle. This is where the RL30 crossed to the upside. So here's where the RL30 crossed and then went below the Bollinger Band mean 30 all the way down, makes the turn, comes back up. Here's where it crosses to the upside, and now we're in the upside leg of this. So this whole period of time is one segment. And I break that into two pieces. Here was the down portion, and here was the sideways portion. And this sideways portion mathematically must feature this kind of pocket opportunity. That's when I get to the script. We're calling it the OWL script, the wisdom pattern. That's why this is so important. And then you have one pocket, two pocket. This could end up being a third pocket if this thing holds. So now let's look at the specific trade frame. If this fails, that means it will have come through the dragon and the dragon didn't hold. The next one is the RL270 and then the RL90. You know, it'll blow right through the Bollinger Band mean. And then down here, it's the bottom hump of the dragon. So that's the case for down here. I would probably add this second position here. If it falls out of the river, this is where I would add a second. And if I don't there, then I have to do it here. And if I got a second position here, then maybe this is where, if I was good, I could get a third position. But the upside trade is also easy to see. It just has to, if it can get above here, then there's no volume up here as resistance. Off it will go free and clear. And if it does that, then the size of this move is the size of the next move. So I really like this little location, this posture. This is in Lowe's, home improvement company. Honeywell, this is the last one. River was sloping down. Here's where the RL30 crosses the Bollinger Band mean. Here's where the little pocket happens. This was sort of anomaly. There's the Z. That's the P7 trade. But even after that shock and awe, notice that it's still, that didn't stop the river to keep going, and you got a pocket to the upside here and here. So now we're in this stage of it. If it can get above this line, above that resistance, it's free and clear. So what we're doing is front running that move if it works. But if it fails, it's going back to the Bollinger Band mean, bottom of the river in the 270. If it fails there, I would add a second position, and my target would be down here. And if that fails, look out below. Big time down. All right, so those are the 12 patterns. Now, what you once I get this uploaded and recorded, you're going to have two sets of discussions where I talk through my trade frames. And if you haven't gone through and marked up those blanks, it's still worth doing it now, because when you look at it, you won't remember all the things that I said here. It's still time to do call it level 1.5 or level 2, and that is where you do your markup independently on the blank charts, because the file that I just uploaded gives you the blank screens like this one, and you can, like all of these, you can mark them up in the way that you see fit, and then compare your notes to what I show. And then if you need to rehear my discussion of these, you can replay either this video or listen to the other video, and that will give you the ability to compare your markup to my markup. And that's what we're defining as level 2 proficiency. And then for next week's homework, I want you trying to operate at level 3, and that is you go through the reports, you pick up to 5 symbols that are interesting to you, you put a trade freight on them, and mark it up in such a way that you can incorporate some of this discussion of interpreting market conditions in the various ways that we've examined in this course. So are we all clear on that as a homework assignment? I'm hoping that we are. I'm going to write it up in that way. Okay. Okay, that's everything that I wanted to cover on this one. I could go through the list of the portfolio performances now that we're 3 days into the actual. Where we are right now in the market is that we're 3 days further into price behavior. So rather than get caught up in those details, let's just cut it right here because we're about 90 minutes into the discussion. So what I want to do is just summarize instead the specific elements of this owl pattern that we've been documenting inside the chat room. So with your permission, I propose to do that. And it's only going to take a few minutes. Otherwise, I would take a break. But this one actually goes pretty quickly. All right, so this just happens to be an intraday trade. And so here are the important the first 6 steps inside the trade frame. And I'm going to show you the script, but I wanted to just see it on this one because it's so clear. Condition 1 is that there had to be a non-controversial large move in one direction. All right, that's non-controversial. That was a big trending move. Condition 2 is that there's now an RLCO that happens outside the river. Condition 3 is that the RL10 crosses the dragon. Condition 4 is that the 30 has started to hook up. So here was the 30, and it started to hook up. Condition 5 is the dragon is also pointing up, and that gives you condition 6, or the action 6, which is make the entry in the pocket. That's what the pocket looks like when it forms on the hard right edge of the chart. And so my first target was nothing more than the RL 270. All right, so let's try that again now on the Uber Zoom. So condition 1 was there's an unambiguous significant move. Everybody see that? If you don't see that, let me know. You can tell because the dragon is completely out of the river. Look at this point. The dragon temporarily got outside of the river altogether. An unusual condition. This would be the normal place for him to recover and come back, but he didn't. He gave us another great big leg down. The size of this leg down was the size of this leg down. That's why this is such an awesome trade. That's why this Z3P breakout up here is so awesome. The pattern 5 breakdown, when it breaks down, you never know when you're going to get this huge move and that huge move, but it starts with this sideways quiet channel pinch. That's pattern 5. So the unambiguous move down is number 1. RLCO outside the river, 2. RL10 crossed through the dragon, condition 3. Condition 4, RL30 hooked up. Here was the 30 on the way down, and now it hooks up, and the dragon is pointing up, condition 5, and that's why we buy it in here inside the pocket. That's step 6. When we buy it here, no, I put my stop below that RL10, which I treat as the real price. That's the swing low, is the RL10. It wouldn't offend me if you put it down here, but I use the RL10. The other pieces of the script, step 7, 8, and 9, are how we are thinking about managing this stop. Once this thing starts going, under what conditions do we move this so that we don't prematurely move it and get out of it. But I want you to see these first 6 steps in the pattern to get it well started. This is becoming a system because we've got very precise definitions for all of those 5 conditions, right? The other thing I want you to notice, and this is a tip, right? Here's where the RL30 crossed the Bollinger Band mean to the downside. And then you get this giant move down. It hasn't quite yet crossed the Bollinger Band mean. It will somewhere out in here, maybe in 3 or 4 or 5 days, because this 30 will continue to steam north. As long as price keeps moving, the 30 is going to steam north. So somewhere out in here, we're going to get confirmation that the RL30 has crossed the Bollinger Band mean. That's going to happen somewhere out in here. So we're getting a little front run on that condition. And these 5 conditions right here say it's worth our while to buy this low risk idea in the pocket, this pearl of great price. That looks to me like the lower jaw. That's a pearl that's wedged in the teeth of the dragon's mouth. I don't know. But that's that. And then this is our target. This was an intraday trade, same idea. There was that 1, 2, 3, 4, 5, 6 script happened out here. It also happened in here. And then it happens over in here. This is that RLXD. It happened here as well. So I took this trade coming south. It held. I was using the VWAP as my initial stop. It rolled over here. I took this exit because I wanted to preserve that move. But when it failed further, I instantly auto reshorted it in order to get this move. This move is the same size as that move. And now this is that patterns we'll be able to see 1 through 6 in there, and it's all over again. So this is a trade that went from the scripted pattern from here into a sideways quiet channel, and I can play the breakout trade. And now down in here, when that run is done, all the conditions for that pocket trade are in place. Condition 1, a big move down. Condition 2, RLCO outside the river. Condition 3, RL10 crosses the dragon. Condition 4, the 30 has started to roll up. Condition 5, the dragon is getting ready to go. Now, this right here is not the entry. This was covering, and the actual entry you'll see on this next chart. The actual entry. This is where I draw the blue line. Say this move is over, and now I've got 1, 2, almost. I don't quite have 3, 4, and 5 yet, but they're about ready to happen. What I want you to notice is that by waiting for conditions 3, 4, and 5, after a big unobservable move, you're actually waiting to see, you're not taking the first P1. You're waiting for conditions 3, 4, and 5. And that to me is wisdom. That's just wisdom. And that's why I'm calling this the owl pattern. Right? And it sets that you can afford to wait because the target is up here. And so on swing trades, this is how you find those turning points after long directional swings in one area. This is how you identify potential turning points. In the same way that this identified a potential turning point up here. And instead of being up, this thing went down. I'm trying to find the actual. This is the one. This is the last one I want to show for today. This is the script for those six conditions. This is on the flashcard that's in the file section on the Swing Online Basecamp. All right. So what you're looking for, these 5 conditions, 1 through 5, to occur, and then the entry is number 6. So a big move. In this case, I've written it as a big move and a hybrid frog. It can be just any big move. RLCO outside the river. RL10 crosses the dragon. The 30 has bottomed and started to curl up. The dragon is curling up. Then step 6, you can enter. You place your stop below the lowest low of the RL10. And then don't screw with that stop until this thing has had a chance to work. Don't prematurely exit. The other things you'll notice on this this flashcard all the pockets that are available. Once you start seeing this, you can't help but see it. Here was a pocket. So this was the hybrid frog move down 1, RLXD, RL10 crossed the river, the 30 and the dragon both curled up. Here's the entry. It comes up and tests the RL270. That's a good trade in that direction. So you get that nice V bottom in win. That's why this is like my current favorite intraday target. You get another one here. You get another measured move down. You get an RLX pattern 1. RL10 cross the river. The dragon and the 30 all roll up. Here's a pocket. All 5 of those conditions occur in there. All 5 of those conditions also occur up in here. After this big long move, which by the way you could participate in by using these pocket moments to keep the momentum going. By the time you get up to this box though, you get another owl script that tells you that maybe that morning run that looked like this, that it's done. So let's see how that works. Number one, you have this large trending upward move, non-controversial, unequivocal, unambiguous upward move. Everything is out of the river. That's a big trending move. Now you have an RLXD outside the river. Here's one. RLXD, that's one. I'm sorry, pattern 1 or condition 1 is the big upward move. Here's condition 2, the RLXD. Correction, the RLCO pattern 1. The regression lines crossed over each other outside the river, so that's 2. So you could take that as a P1, but notice that the first move is often quite it backs and stalls. It can be choppy. So the idea of this OWL script is that this is the deferred P1. This is the powerful move. So 1 is the move up, 2 is the RLCO outside the river, 3 is the RL10 crossing the dragon. It happened here, but notice that the 30 hasn't flipped over yet. So that's why you can't go short here. And the dragon is still sloping upward at this point, which is number 4 and 5, right? So you can't get that. It's not till you get out here that you see all of those things in conditions. You had the big move up, RLXD, condition 3, the dragon has, or the RL10 has crossed the dragon, and the 30 has now finally rolled over, and the dragon is pointing downward. The other thing that makes this powerful is when the lower belly of that dragon right there gets violated. When you see price going that way, that tells you all of this just got negated. That's the not later than entry. And that's a pocket there. Here's a pocket to the downside because it could have retraced, but it didn't. Here's a pocket. Here's a pocket. So you get this huge, nice move. Now, I want you to notice inside this black box, all 6 of those steps occur down here as well. So pattern 1, a big move, whether this is a hybrid frog or a big trending move, that's condition 1. Condition 2, RLCO outside the river. Condition 3, the RL10 has crossed the dragon. Condition 4, the RL30 has bottomed and started to curl up, and the dragon is curling up. That makes this the entry. And here's another pocket. So you get this. It's a deferred P1 in that sense. What this lets you do on any time frame is it helps you change your mind about what's going on in the larger market conditions. And the reason that's important is because once we get conditioned to the market going this way, we see all these little continuation patterns and off they go, and we want to keep going long on this thing, keep long. Eventually, there comes some time when notice that the river was up and now the river is down. This transition period right in here, that's described by those conditions right there. And when the closer you can get to changing your mind when this happens, the sooner you are prepared to start going in the other direction. If you can be that agile, then you have an edge over all the people that are still trying to buy dips over here. They're trying to buy the dips over here, but there's no follow through because the big trend is down. So by changing your mind in that black square, you have created an edge for yourself. And I don't care whether this is on intraday or on the swing trade basis. That's the essence of this idea, the OWL pattern, this wisdom pattern. That's what this whole script here is about. I really want you to learn that from this course, because that's an integrated way to handle all of that language we put in the earlier lessons about assessing market conditions and all that jazz. We tend to get so fixated on the particular patterns that we're seeing. This is what we end up seeing. We look at the market in the following way. We tend to get caught up in the vision that looks like this, and so we don't have enough context. We're too close to the problem and emotionally committed to the idea that we don't see this larger context of what's going on when you just zoom out and take a wider view. These black boxes, what the purpose of this is to show is how at each of these locations here in those black boxes, that tells you where the market made big changes in the protocol, in the trend. Starting at this, it went from down to up. And in here, it went from up to down. And in here, it had sowed the seeds about ready to go up. And by the way, later that day, it was up around 94. So this move actually unfolded in that direction. That's the point that I want to make. So I say all that. I know we must be near the 2 hours. My wife just gave me a bowl of ice cream. So I officially have to get ready to end this thing now. It's a matter of priorities. So the final thing, this was where I was trying to coach Sanal today. What I noticed her doing was she's spending a lot of time in here swirling around inside these little tactical plays, trying to read and make meaning out of each of these tiny little bars. But what I want her to see is just step back a little bit. Notice these big arrows. 1, 2, 3. Those are great big directional moves in the river. First it was down, 1, then flat, 2, and then up, 3. That turning point occurred inside this blue circle, and that's where all of the 5 conditions in the entry occurred. Big move down, RLXD or RLCO outside the river, crossed the river, or I mean the RL10 crossed the dragon. The 30 sloped up, the dragon is sloping up. All of that happens inside this blue circle. And that signals the potential for a transition from down through flat into potentially up. Look how much all these black bars are just showing what the normal noise channel is. Price patterns inside there are just within the noise. There's no individual information content in the individual candles. The significant change is revealed through the use of these statistical indicators that summarize, synthesize, and smooth that price action into very clear lines. Notice how I'm tracing the 30 right there. The 30 was down, it got flat, and it started to curl up. That's the difference. That's the transition from down to sideways to up. And so when you look at the write-up of that script, when we talk about the stop management, steps 7, 8, and 9 give you instructions on how to say, you put your stop, when you buy it in here, you put your stop below the RL10 or even the swing low and just keep it there until the Z2 line starts to curl up, and then you just track that thing all the way up. And so you don't get squirreling around inside the chop. You let that river flow upwards as indicated by the potential of that owl pattern, and then you just let that thing go. And now instead of having 20 trades for a quarter of an R and netting a half an R, you get one trade or maybe 2 trades, and that thing pays off. Much simpler. And then if you do that, you can now have 2 or 3 of these things going on at one time because you're not getting chopped up inside Crocodile River by trying to read too much into each and every candle. Let the statistics and the indicators work for you. That's the point I want to make. So here's the assignment. If you didn't do the markup, go ahead and do the markup on the blank file that I just uploaded, and then compare it to the walkthrough that I just did and go through those notes. And then get that done by this weekend. This weekend, your task is to move to level 3, and that is get the report, identify up to 5 symbols, frame them up, and then post that in the files. I'll put that in writing to you by tomorrow. Okay? So that's all we got for now. I'm going to get this recording posted and the link provided to you on the YouTube right board. So that's everything I got. You guys take good care. 2 pretty good hours at work. Thanks for hanging in there.